Chamath Palihapitiya, CEO of Social Capital, has issued a recession warning. In a recent interview, he stated that the world would suffer a global recession in the next 2 years, and that people have no idea what's in store. This is what the Canadian venture capitalist with a net worth of roughly $1.2 billion has to say about what's going on. I will explain inflation in 3 different chapters, and we've been seeing the first 2 chapters play out. So 2021, Chapter 1, was all about energy inflation. It caused that initial spike in inflation, and then we had it come off. 2022 was really good when it came to inflation. All these prices and all these things went up because the input costs went up, and we had to bear the implications of that. But then it started to ebb. Now, if you look at the tail end of 2022, when I found super interesting was the number of articles I saw about wage inflation, whether it was with Biden using an 1800s-era law to prevent a railroad strike, the number of states that increased minimum wage, or the trend around unionization. So in general, my thought is that the pendulum is swinging very markedly away from capital and towards labor. Certain metrics that are now available, according to Palihapitiya, point towards impending economic shifts, such as the savings shortfall and the shift in the global economy to the second stage of the crisis. His presumption is that it's an indication of when people exhibit signs of being more eager to return to the workforce. A further cue is when credit failures start to decline. As a result, people start to lose all their funds and subsequently lose their credit cards, which then causes them to suddenly become uneasy. We are most likely at the beginning of the supply side concerns after all these events take place. After that, demand collapse sets in, which could put pressure on equity. The billionaire investor and Social Capital CEO criticized the US Federal Reserve for maintaining historically low interest rates in recent years. When savings accounts and bonds provided poor returns, investors were driven to buy riskier assets like stocks and cryptocurrencies as a result of the FED's weakening monetary policy. It perverted the market, it distorted reality, it allowed manias and asset bubbles to build in every single part of the economy, whether it's digital trading cards or arts or cars or real estate or NFTs or SPACs, he said at the Axios BFD Summit. According to him, the drop in asset values this year is the result of liquidity being drained out of the economy. When you provide free money into a system, manias will build, he said. Now that we've taken the money out of the system, these manias will end and you will find the market clearing price for a lot of securities. Nevertheless, Palihapitiya believes that investors should now brace themselves for a scenario in which the FED continues to raise interest rates until 2025. Fed Chair Powell said he'd rather overcorrect and break things because he has a toolbox to fix the broken bones. But he doesn't have a toolbox to fix if they undercorrect and they have rampant inflation. Not more explicit you can get. So he's going to take rates higher until demand is destroyed and enough demand is destroyed such that inflation is tamed. But that has huge implications to all of us because we all have to do our job trying to build a company, trying to raise money, trying to invest money. It's just getting much, much, much harder than I ever thought. For me, I'm like, wow, I thought we could get through the worst of this by mid-2023. But now you gotta plan out for the worst, which means, okay, now I'm thinking, man, rates could be much higher for much longer, which means we could invest in this market until early 2025. You may say, hey, that's way too conservative, but you have to plan for conservatism at this point. A high interest rate environment is usually unfavorable for risk assets such as equities and cryptocurrency, since borrowing funds to invest costs considerably more, causing a flight to the US dollar, and in such a case the economy is likely to falter as demand is squeezed as a result of the rising borrowing prices. Palihapitiya was also asked whether he expects a US recession in the next 2 years. Absolutely yes, he said. I hope it's not true, but I think the odds are very, very high that we are.